to Stephen Johnson's stocks, 3.5k a month, not as good as the 15k a month the month before, the 10k a month the month before that. And the reason why is the strategy's changed. The old strategy was look for a stock that is gapping up, but previously it had ran like 200%, give it all back. There's a lot of longs that have become bag holders in that stock. When it pops up the next time, say it's a 50 million mid float, high float, 50, 60, 70 million, then shares the next day when it gaps up and it only trades 10 million, you know that there's 50 billion shares worth of longs underwater. So it's a very safe short to take 10 to 15%. Now the market is so strong with such a big influx of volume, we're not saying 40, 50, 60 million days anymore, we're saying 100, 200, 300, 400 million days, that stocks are running further and higher. So it's not so easy to short the first green day. What tends to happen is you'll get gap up after gap up on WKHS, or you'll get a first green day, then a big gap up like on IZEA this month. And it's a game of finding the top. And finding the top is a new strategy that I've employed, but I've made a lot of mistakes this month trying to figure it out. And generally the rules that I've learned to adopt, which you'll see in the video, is there's two scenarios. When you're shorting a first green day that's gapped up with bag holders because it was previously much higher and it's a 50 million float, then you're safe to take more size early on the first green day because you've got bag holders selling, you've got short shorting, and I'm also one of the short shorting. So everything will make the stock price go lower. On this new strategy in this hot volatile market when stocks are going up and up and up, it's not the same. You've got shorts, you've got longs buying, you've got shorts getting squeezed, and then you're fighting against both of them trying to find the top. So to do that, you can't trade 930, 945, 10 because you'll just get annihilated. Even if on the one time you're right and the stock plummets, it doesn't make good risk reward long term to make that a profitable strategy in the long term that I've found. For what I've found in the results that I'll document and illustrate with you today is that you need to be shorting 10, 11, 12 starter size. And if you do it with starter size, you can be wrong 2, 3, 4 times. And then when you're eventually right, average into the winner, because even though these shit stocks are volatile and they went up, up, up and up, all it means is that you've got even more profit when it was down, 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 down. So if you get the strategy right, I mean, I was making 10 to 15K. If the market stays the same, there's a good chance I can make 20, 30, 40K because it's so much more risk reward. You've just got to get the top. If it goes back to normal, then I'll just make the 10 to 15K. But I'm trying to put myself in a strategy where I win and win. And you'll see the old strategy versus the new strategy based on what I've explained now. And I think you'll really appreciate it and enjoy the lessons. So we'll get through this relatively quickly in the interest of spending more time on the charts. It's not my performance, but April was a solid month, closed out 10.3K, not many red days. I was very good at taking small starters, waiting for confirmation, and then building into the winner. May, I got even better at it, and I was so good at it that I'd have tiny losses when I started in small and it went wrong and I'd cut it. And I'd only ever average into winners, so I just had a less of an average high win rate, but a much higher win rate. So that was all green days, 15.3K a month. And then June, something went wrong. I'm gonna go through it and find out with you, but it was immediate losses. And in this video, we're gonna look at this loss, this loss, this loss, and this loss. Every loss above $1,000 to examine where I went wrong, and we'll find out together. But ultimately, it still wasn't terrible. I mean, I came out with 3.5K, after 5.3 net, 3.5 after fees. So it's still $3,500. Better than most jobs, and more significantly, 5 out of 6 green months. We can see here in June it was 3.2, but that was around 1,000 borrow fees. That takes it down to 2.2. And I switched. But I didn't switch, I traded with both Speed Trader and Trade Zero. So I started with a bigger account, 30,700, because the minimum is like 30K. And I got that up to like after fees again, like 31.8, so 1.5, 1.6 and that. So is it 30 point? No, 1.2 plus the 2.2 is like 4.5, 4.4, 4.5. So that's the, oh no, 3.5, sorry, my mistake. 3,500 profit, which is what the Excel should say, 3,503. So changing a lot of stuff with the broker. I'm using DAS a bit now because I've got to go through DAS to get to speed trader. I'm still on stocks to trade with Trade Zero. I'm multitasking across a few different things, so I'm still trying to find my shit out. But so it's been a transition month. But this month I seem to have got the hang of everything that I'm using, and it's going a bit better. As we were talking, me and Tim Bowen just the other day, yesterday, on the podcast about a guy who's a short seller and he shorted low floats on high volume. He blew up and now he's homeless. I'll not say the name, but and he was laughing. Tim Bowen was laughing at me, being like, "It's a stupid strategy," and I was like, "Nah, it's not. It's a good strategy. I mean, I've made 40k this year, probably maybe a little bit more, around 40k this year from this strategy. So it's not a stupid strategy, but you've got to be very careful. And it's particularly hard, and this is the point Tim Bowen made. It's a particularly hard strategy when the market's hotter than ever, because we get these big spike and fail, spike and fail, spike and fail, gap up and fail. They always come down, but it's about finding the top. And it's harder to find the top when you're starting to get this, you can't see it on that arrow, this crazy insurgence of volume, like 200 million, where previously it's doing like 60 and 40. And like 200, 300 million is the new norm now. So what got me, and it caused a $2,000 loss because I was just starting to adjust to this pattern, and generally you'll be short here, you'll get a pop up, and then you'll expect to fail. Maybe it'll come to a double top, lower high, and then it's going straight down. So if I can just explain that with lines, you've got pop up, maybe it breaks the higher day, comes back down, lower high, fail. That's generally what happens. But with this extra volume and the way things have been trading recently, we get the break of the high of day, holds, and it tries to rip up again. Ultimately, it fails because it is trash. But the stocks that are trash still fail, most of them, like vast majority. I mean, look where this ended, back where it started in the ones, right, went right up to the threes. The difference is that they can run more before they come back down. So they go up more, but then they go down more. There's just more volatility due to the volume, that's it. So I was short around the 189 starter. I think news popped up here, and I was through off guard and I added short. Because I thought I might break higher day just a bit and then it'll come down. What got me is when it broke higher day, I cut it, got annoyed, lost discipline, added. And this is the oldest trick in the book. We can't see VWAP here, but this line's around where VWAP was. And a lot of stocks in last month, and a lot of stocks with higher volume, they'll dip under VWAP, and there's so much volume that will get bought up again and squeeze. So what happened to me is added to try and get me money back, squeezed up, had to cut it again, lost $2,000 because I was way over leveraged, and it threw off me risk reward, because if you're adding for a crack and there's so much volume on the stock and it's holding and then popping back up VWAP, your average is 260. When it squeezes up to 310, you can't take 12% with full size. And that's the mistake I've made. And yeah, I took a loss here, and then I added too much size and took a loss on the way back up. But it was actually a really simple trade. If you cut it here, if you're short here, and this is how I've been playing more recently and why I've had more success, I had a $5,000 week, I think, four or $5,000 week. On the third week, so I started to get it. 750 day yesterday. But if I'm short here, which I would be a fifth of my size, yes, when it cuts, if it breaks higher day, cut it. Otherwise, if it doesn't break down, you don't even get a double bottom here. You just get a hold and push. I know this is on 15s. There might be a double bottom. We can't see it. But the fact that it washes and rips through, that is a general rule to leave this till after 10:30, 11. If you leave this till after 10:30, 11 and then look to start back in for an afternoon fade, because it will fade. I mean, what time is it? You've got 10:30. You've got 10:45 here. You might be somewhere in here. You might be shorting somewhere in the double top. You've got the fade all day. If you want to swing it tomorrow, it comes all the way back down to as low as the 170s if you want to hold the day, or even on the first day, 180s. But to recap, I don't mind starting in very small, because if you're starting small and you do short into the higher day, 250, 260, your average is about 245, you're cutting at 255, you're not losing very much. And then when you're really shorting around 10:30, 11, and you're building into that winner, there's so much room. You've got, like, say the double top, you've got like 200 shares, 300 shares, that's $1,000, 400 shares, 1,200. You get the bottom, you add in, double your position, you're in 2,800 with the house's money. Cracks through at a little bit before close, you're in 3 grand. What'd you wake up to? Fucking load of money. So around the 8th of June was when a lot of the George Floyd, Black Lives Matter, a lot of that stuff and the police riots, it was really kicking off. And more so probably than it is now, because it was just the start of it, which is when all the hype is. And DGLY provide cameras for police. So obviously the stock's going to rise because it becomes a hot sector. Why I was shorting DGLY, 52-week highs, multi-year breakout, multi-month breakout, multi-day breakout on very high volume with a strong catalyst, one of the strongest you can possibly have. In the morning is just fucking retarded idiocy. And we don't even need to look at the chart. It's just such a retarded move. So just to give you guys a bit of a down low, a lot of these companies, IZA as well, they need money to operate. So the easiest way to get money to operate is to inflate the stock, pump it up, get it higher. The easiest way to do that is pre-market when the volume's light. And then use retail traders to let them buy into the dream that there's a made-up press release that sounds good and the stock's up 50%. Let them buy the gap up. Let them go and chase for the spike. It's up 50%. It's got this news. Buy. And then like say for example, with IZEA give shares to a private investment company at a discounted price, and then the private investment company give IZEA a load of money. What happens is IZEA will pump the stock pre-market when the volume's light. You retail traders, and say for an example of this is here. Retail traders will see the gap up in 30 cents or whatever it is. They'll buy it thinking, it's the next big thing with a press release, but the investors will sell into that buying pressure. They wait for like the 15, 16, 20 million. They'll sell into that buying pressure and then it just all fails. So IZA get money off the private investors get money from the retailers and the retailers lose. And that's basically how the stock market works. But that being said, in this instance, when the stock doesn't gap up on light volume, it runs on from daily volume, then it's a sign that this stock has got some actual weight behind it. So it ran, and then the next day it gapped up based on momentum, based on the fact that it's squeezing up, because a lot of shorts will be in this thing, and it's just going to feel like every other time. The difference between that time and the other time is they're not gapping it up on light pre-market volume for the private investment company to sell into the momentum from the retailers. This time it actually looked like it ran all on its own. So when it gaps up, it's a bit of a scary trade to take straight off the bat. But again, they ramped it up in it closed at its highs. Then they ramped it up pre, and again, I can look at the dilution, but I want a fucking 50-minute video because anything over 15 people won't watch. It should be a separate video on its own. But they ramped it up pre-market, and you're in a difficult spot to sell because it's 52-week high multi-year breakout. If you have a look here, 52-week high multi-year breakout. It broke out from a key level. It broke out from the ground. It didn't gap. But mind you, the volume was tiny as well. I don't mind kind of chasing this down from the 245s, risking it off 258. But by the time it comes all the way down, I don't really know what I was thinking. I was adding in short here and here. And then when it made these lower highs, descending triangle, it might snap, but it's down. I mean, why? What's the point in shorting from 203 to 10 when it came down from the 270s? Like you're 60 cents off the highs. You've got no real room to play. And then when you get this, but I'm just thinking, look at the downside, but I still think it's not the best short when you've got all this upside. And when you get these higher lows, and the descending triangle, something looks like it's about to happen. It's got to break this point. So I need to be fast on the covering profit or covering loss. I wasn't. And then the motherfuckers put a press release out on just after the wedge. And we got 4 million squeezed all the way up. But it was just an immediate loss. Last of the big losses, but by no means least, WKHS must have taken me for... I mean, if you look at some of these losses, I mean, all majorly avoidable. And this is hugely avoidable. DJLY was hugely avoidable. I mean, that's $5,000. Puts you on an 8K a month for just 2 mistakes. But again, like, the market changed. It's more aggressive. It's more bullish. I'm shorting these front sides of the moves, which I know a lot of you guys are against. But at the end of the day, I've made 40 grand doing it in the last 12 months, so I'm not going to stop. Just got to refine in my own strategy and process. But the thing with WKHS is it looks like it's overextended. It's initially from the 150s. It's gone parabolic. It's gone even more parabolic since. But we're just talking about the 24th, where it's like really had 3 big green days. Normally stocks fail on the 4th. I'm looking at WKHS. Sorry. On this day, on the 24th, I'm thinking, right, this is the overextension. What I should have done is wait until 10:30, 11 o'clock, which I've said for every stock in the video. And you know what it is? Sometimes if you wait till 10:30, 11, it's not the golden rule. Sometimes you'll get squeezed then, but at least if your starter is at 10:30, 11 and you're wrong, you lose $100, $50, $150 if it goes really wrong. If you put a starter on, feel it out 10:30, 11, it's maybe 50, 60% fade, 40%, 50% don't. But you lose $150, you don't lose $3,000. So WKHS, shorten the spike, thinking it's over. Washes, get dead excited, I'm right. Add into the bounce, which is something you should never ever do on a stock that's 52-week highs and keeps on gapping and going and gapping and going and gapping and going higher and higher and higher. I would recommend, I'll never touch one of these, I'll say it and I will and I'll fuck up, but my best rules of practice and guidelines are not to touch these till 10:30, 11, 11:30, 12, 1, depends how strong it is. And if you do touch it, you touch it with a light starter. And then you build into a winner. You cut the light starter if it goes above. It's the only way to protect yourself in this insane market with such a risky strategy as mine. Now, when this wash that added got squeezed up, lost, got pissed off, saw it fade, trapped into all of the... I mean, basically it rips. And you know what gets us the most? It's the best long ever. Higher day in the morning. Breaks, comes up, double bottoms perfectly. It just kills round. Higher low, fucking boom. Straight to the 820s. I mean, it's the perfect buy, and I'm adding in short like a fucking spasticated fucking retard in the 760s. Pumps up to the 240s, pumps up to the fucking... This is where all the loser shorts are all getting squeezed. And say, for example, you'd have played it from 10:30, 11, like I say. You're looking at you're watching it rip up and you think, oh, this looks a bit scary. I'll look for a lower high. Where's your first lower high? You've got a lower high here in the 11s. Short a little bit, pops down. You get the double top here. Add a little bit more. You've got a triple top. You've got this higher low double bottom. You think, oh, this is a bit dodgy. Quadruple bottom. You're like, all right, I'm just staying in. Double bottom, as it starts grinding up, you think, look, it's fucking bottomed about 6 times and it looks like it's going to break through. Think I'll take a bit off around here. When it breaks through, I think I'll take the rest off. You're out break even, you're out for a small loss, comes all the way up, you ignore it for the rest of the day. Next day, you might think, I'll attack this double top. Again, it's about 10:30-ish, like, oh, I'll take a starter in this, add into the winner. You've made fucking shitloads. Does it go higher? Yes, it goes higher, but you can't play those reversal consolidation days as people take profits. And that's a wrap. I just want to end by saying that 4 years and 1 month ago, I set out on a mission with weekly YouTube videos to prove that anyone, regardless of financial situation or demographics or education level, because I felt that, I was kind of okay at school, but I wasn't that clever, was loaded with credit card debt. I wanted to prove that anyone could make it trading. And while I haven't become a huge success, I have proven transparently that anyone with willpower and discipline and effort can go on to be successful in trading. And it's almost like mission complete, but what I will say is it's more mission started. So it's great that I've proven that over the last 12 months I've made around 40K. It's great that I've proven that you can do it and I've made back all the losses and made more. But now it's about hitting that 100k, then hitting that 250, then that 500, then that 1 mil. Hope to fucking God no British person becomes Tim Sykes millionaire student before me. I want to be the first British one. And we're on the right track. So I just want to thank you for the support. And particularly, I'm going to start saying thank you to more people. Alex Salfitnikov, Twitter handle on the left. Thanks for your support. Thank you for the kind words. A few people mentioned me as an inspiration and a help as part of the journey. I fucking really appreciate it. I almost don't understand how it's being said, but I'm grateful because I'm just trying my best to put shit out there for free. I think it should be free. So Alex, thank you and congratulations on your 8K month. We need to catch up sometime. Billy, DSLC, I get a lot of questions and Billy randomly took it upon himself to answer some of them and just point people in the right direction. I'm all just about helping people, and Billy started doing that on my feed. So I'm like, wow, what a great guy. So just thank you, Billy. And last two, F1 Team Boss. He's been in this game for years. He's lost some cash, but he stopped the bleeding. I'm talking to F1 Team Boss on phone, chat, WhatsApp. And I hope I can help him get better and pass on some knowledge, whether he wants to hear it or not. But he's a good guy and his heart's in the right place. He's just fucking daft like I am. And lastly, Dan Irish. There's the Twitter handle below. He reached out to me and helped me on IZEA and give some advice without ever asking me. And it's commonly said that a lot of traders get arrogant and don't want to help people for free. And they leave the noobs in the fucking dust. They get a bit pompous. Now, I don't really personally know anyone specifically like that. But I like the fact that Dan's made hundreds of thousands of dollars and he still took the time to reach out to me. And other top traders have as well. So I just want to leave you with that, and I just want to leave you with saying if I ever do make it, my promise to you is that I'll always be wanting to help for free. Some things I may charge for at some point. If I put 50 hours into something like a DVD, I'm probably going to charge it, but it'll not be anywhere near as much as anyone else. But I can promise you the monthly videos, even weekly recaps, they will be free. Because you can see it in my eyes, I'm fucking here for a greater purpose.